One of the fun things about doing commodity focused research is that there's this real emphasis on supply and demand. And most of us almost approach the business in a textbook sense. We kind of say, well, where's demand at? Where's supply at? And we try to get a directional sense of the market based on whether we're in a deficit or a surplus. But I want to probe on that a little bit because we've had some fun conversations about whether the supply-demand balance really fits into a econometric or financial framework for thinking about the oil price. What are the other variables that matter in addition to supply-demand? And do you think supply-demand at any given moment really is something that tips the market one way or the other?
Yeah, I mean, I think it's a really good question, and I would have said yes, perhaps a couple of weeks ago, but we actually have a project going on right now with our data science team that's trying to kind of have a good regression fit for oil prices in the last 12 years. And it's obviously been a trial and error with a lot of independent variables, and a lot of I actually spent a lot of time on trying to figure out where the supply-demand balance is for the crude oil market. I spent a lot of time writing about spare capacity, where that is, and how that's important for oil prices. And ironically, the results that we've found so far is that at least in the last 12 years, these really haven't been some of the most important variables for the oil price. Interestingly, I mean, dollar is something that we always talk about. We know it's quite important, and it did actually end up being one of the most important variables. And I mean, we know recently dollar has been very strong, and arguably that has been one of the reasons keeping a lid on oil prices.